From what I understand, the principle here is to take a more holistic approach to agriculture and the downstream value chain by allowing financing on commodities for security rather than just assets. Isn't this risky though, because commodities really are driven by all sorts of factors that you can't really control?
Yes, of course it's more risky, and you actually bring a new risk to the bank in the sense that you're financing something that's still been grown. At the end of the day, only then the commodity becomes available to you to be sold. So in that sense, you're actually bringing more risk to the bank, and that's why it's important so that you partner with the agribusiness like BKB in this instance, so that you can actually manage those risks while it's still growing. So there's somebody monitoring this. But of course, that agribusiness wants that commodity to trade with at the end of the day, so they've got a vested interest into the commodity, and that's why it's a nice symbiotic relationship which you can do. And in this way, you can actually now lend more into the agribusiness that you could have previously borrowed into the business itself.
Well, let's take a step back and see, why can't you just give financing on the basis of a farmer's assets?
Well, at the end of the day, I'm borrowing money out that belongs to either deposits on the one side or capital on the other side that's gained through the share markets. So at the end of the day, I've got a responsibility to repay that debt one way or another. So what we're trying to achieve here is basically to say, how do I make it safer? If I've got these new risks to come into the bank because I can't finance the farmer more, he actually needs more money now than the farm is worth in terms of the money he needs to put into the soil to grow the crop. So at the end of the day, how do I finance this if I can't get, that means I've got to go unsecured. And in this instance, I actually bring in a little bit more security and tangible security. There's also other ways of mitigating this risk, because in principle, as soon as I take the commodity risk on board, I'm taking a price risk on board, and I'm also taking a production risk on board. So the price risk we normally can hedge out, and because you've now got an off-taker for that commodity, you can have a zero capital.
BKB being the off-taker for the commodity.
BKB being the off-taker for the commodity. They then, we hedge it in both directions, for one for BKB and the other one for the farmer. So I don't need capital to do that, so I can do it much cheaper. So the hedging of the price becomes cheaper to the farmer firstly. So that's an advantage to the farmer. And then secondly, I can bring in risk mitigants through my insurance brokerage, which I've got in terms of crop insurance and disease insurance and drought insurance, so that you can actually mitigate that production risk side of it. So it's a win-win for both the farmer, the agribusiness, and for the bank.
What's the end result going to be? Really, that you can lend more money to farmers to grow more crops and grow the agricultural sector in South Africa?
In theory, it's actually just a cannibalization of it. So it's not really a major growth in terms of your exposure into the market. Previously, we would have given that money to BKB. They would have on-lended it into the thing. So what we achieve here is basically what we call a see-through credit. In other words, they become our agents in giving out the credit on the one side. So it's not really that huge growth in terms of the credit side of it. But the growth in this is in the margin that we can get, because as soon as you do bulk financing, it will be at a lower margin. Now you can do it at the retail side of it, so you're doing it at a higher margin. So the advantage for us is purely that we get a better margin out of the sale scenario, but we also take the full risk. Where BKB would have taken the risk in terms of defaults, we're now taking the risk.
How do you mitigate that risk for yourself? Just through insurance?
Through insurance on the one side, but also through the management, which we contract in through BKB in principle.
Now, BKB has access to 19,000 primary producers in South Africa. I assume some of those are already Absa customers, but I'm sure that you can enlarge your customer base through this new relationship with BKB.
That's exactly what we're trying to achieve, is that the production finance of the other banked individuals, which BKB is financing, will then flow through us. And it's in principle the money flowing in and out. In other words, we are basically just getting the transactional volume through the whole process.
Apart from farmers, does this also affect other suppliers to the industry and also manufacturers to the industry?
Yes, this is just the first deal of which we've done. This is the first time that we're actually doing this type of deal with somebody. Yes, this has been developed not just for BKB, but developed for the full industry, and to grow this into all the agribusinesses out there.
Well, also, what are some of the obstacles and hurdles facing these agribusinesses in South Africa today? Is it mostly lack of skills? Are there other hurdles as well that they face?
I think the biggest hurdle is not the lack of skills. I think it's their balance sheets. Because if you really are a commodity trading business, what do you own? You own a silo or something like that, a store, a gin, or whatever the case might be. the value of that is so low that you can't borrow enough money against that to buy the commodity. So the value actually lies in the commodity, but as soon as you borrow the money to buy the commodity, it's not on your balance sheet in principle because it's a debtor and a creditor. So you just can't buy enough to process. So this gives the opportunity for that agribusiness to grow through your balance sheet. In other words, the bank's balance sheet, and that is, you've taken that off the balance sheet, so it gives you that growth method.
And what sorts of growth are we expecting in the agri sector? How can we develop the sector further using methods like these?
Well, we expect agriculture to continue to grow. If you look at just world trends currently, where food inflation is sitting almost in 20 to 30% in certain countries, we expect, unfortunately, that food inflation will still grow a little bit in South Africa. But at the end of the day, this will mean that the price will actually roll down to the producer. It makes them more profitable. They continue to repay their debt, and that will stimulate farmers to invest. And that's what we need in South Africa, is the investment in agriculture. And I think for the first time we've got that opportunity to actually open the balance sheet so that you can actually invest in more into agriculture.